What's up, guys? I'm going to go over something that I actually learned from one of my mentors a long time ago, Dave Lindahl. And it was at the time it went over my head, but it was about market cycles and where you needed to be in the market cycles. Now, this is something that I know for sure. You need to know how to invest in every one of the market cycles, but I'm just going over what we do at Bell Capital. We focus on multifamily real estate in San Diego County, Orange County, on the West Coast. So it's important for me to share this with you guys if you're thinking about investing with us in our fund, or you're thinking about doing this on your own, or you're just trying to get to know us and doing some research. So here's something I'm going to make this kind of simple. I think it's simple, but I'm going to show you why right now, to me, is the best opportunity for anybody to invest in multifamily real estate, which is why we started the fund. So think about it like this. We all know what market cycles are. Problem is, as an investor, a limited partner or a private investor investing in a fund or a syndication, not all the times you get it. But this, when I show you this visual, you'll see. So I want you to think about it like this. This is the cycle. It goes like that. There's a line through the cycle. So right here, I have this thing that we learned, like I said, through Dave, and Dave called it, this is this, we'll call this seller's market phase two, right? This is on its way down. Then this right here is your buyer's market phase one. So that's seller's market phase two, buyer's market phase one. This point right here is buyer's market phase two. And on the way up again, this is seller's market phase one, right? So see where we are. And we'll do that. At some point, and if you and we'll go back to 2018, 2019, 2000, even 2000, yeah, somewhere around 2018, 2019. So COVID hit, the market was going crazy. Prices were nuts. Interest rates were the lowest they'd ever been. So, like historically low, 2.75 for commercial multifamily real estate. Builders were building all over the place, and then all of a sudden it kind of dried up. The Fed raised interest rates like five. First, they came out to say we're not going to raise rates. Then they came out and raised them five times. Jerome Powell. Anyways, but we've all seen this part. This is where you have a lot of building, a lot of developers are building. They can't build enough stuff. Is really the seller's market phase two for a lot of people. If you've been in the business for a while, we see developers develop multifamily real estate, and because there's so few housing and they know they can do it, they start developing buildings for condos. They'll build a condo building, which is what's going on in Miami right now. So that's they've already pushed past that. That's an anomaly in the market. But typically what happens is you have seller's market phase two, the market's already going down. A lot of new product developers, you have broken developments or broken buildings. They're not continuing on with their development. It's stopped or it has to finish like we see now. A lot of stuff's not going to get delivered till the end of 26, moving into 27. Then all the building stops and you won't see new buildings start building up again until 2029. So just because the interest rates, it's harder to get loans. But this is what's happening. So as the market comes down, which is what we just went through, buyer's market phase one, nothing sold. Nobody wanted to touch anything for the last 4 or 5 years. Nobody knew when the bottom was going to hit, except who? Blackstone. Blackstone went off. They were kind of the big giant that were like, you know what? I think we hit the end. All of a sudden, since Blackstone moved in buyer's market phase one, things stopped. Everybody stopped. Developers stopped. Development stopped. People were like, what are we going to do? They waited. Then in this part, which is what I want you to see, this is the base. This is the baseline. This part right here, which is where we are today, buyer's market phase two. This right here is the billionaire maker. Billionaire. This is the billionaire maker. So most of the people that you see right now that have multifamily funds, syndications, people who've been in the business for a long time, the Blackstones, the KKRs, the Starwood Capitals, they all made their money in buyer's market phase twos, right? Equity residential, all of them at some point in different cycles. So, and that's, we'll just go back to 2008, 2008, 2009 with the housing market crash. When those guys got back in the market after the 2008, 2009 cool off, they went off and they started their firms. All the guys that you see today. That's when they started buying multifamily real estate because they were buying this. They were buying seller's market phase two assets at buyer's market phase two prices because you had developers that built new properties. They went back to the banks. The banks had them sitting on their balance, so they created the savings and loans. They created all these things to liquidate all these assets, get them off their books, and then these buyers, Steve Schwarzman, Blackstone, Barry Sternlicht, Starwood, even Graystar, Bob Faith, Bob Hart. Bob Hart was liquidating these things. He had over at True America. You have all these major players in the real estate market that went into the multifamily space, bought at buyer's market phase two, but with seller's market phase two assets, meaning they were brand new assets. So all these guys were like, oh, we bought a 200 unit apartment building in Texas. We bought a 500 unit apartment complex in Arizona. They were brand new assets, but they were on the bank's balance sheet that needed to get these things liquidated. So they created the savings and loans, this trust, and they were like, get rid of it, all of it. And it went to auction. So that's why I said this is the billionaire maker, because if they've been in business for 20, 30 years at this point, those assets actually catapulted their careers in these guys building these big firms, coming up with big funds, and going off and buying these assets because their risk was less. Now, here's what happens when you buy here. You're already in momentum and moving into seller's market phase one. The seller's market phase one is a builders and developers market, meaning finally the market's moving enough. All these guys who bought these assets now have went in. I mean, this may be a 5 year time gap, a 7 year gap, could be a 10 year gap, right? Before this thing happens. But as you start to see, and you guys have seen it, which is where we are now. The market's starting to move again. This part right here, the buyer's market phase one, the debt's low. A lot of properties are in default. A lot of syndicators go out of business. A lot of funds actually lose assets. A lot of banks take properties back. They go into receivership, or they don't go into receivership. They change hands. Either the debt comes due in the fund, or because it lasted too long, or the equity partners want their debt out, or the fund managers start gating redemptions, meaning like the equity investors in their funds or whatever it is starts to want to pull money out, and they stop them from taking their returns out because they don't want those returns to come out because they got to support the businesses, which is called gating redemptions. So once you kind of get it, as the defaults happen here, there's a lot of assets sitting on the books. Buyers can't buy, sellers can't sell, buyers don't want to buy because they don't know where the bottom is. Once someone figures out, somebody starts to move this part up, now all of a sudden it starts to move, which is where we are today. That's why you see everyone's excited about this new Kevin Warsh coming into office because they're hoping that he's going to raise rates. I don't think he will. I think we might get a lower interest rate, maybe 1/4% by the end of the year. I doubt it, but that might happen. So, but this is why we're hitting heavy on our fund one, on our Bell Capital Fund One LLC, on our Bell Capital Fund One. This is why we're doing this, because now is the time to go off and start buying these assets, because now we can get the newer assets that are already stabilized, been on the books for a long time, that's been sitting on these fund managers and syndicators and some of these bigger firms' balance sheets, that we can now go in and get for what they might have bought it for if they bought it in seller's market phase one, or if they build it in seller's market phase one. Because ultimately, what happens is it's just going to go down again. Seller's market phase one goes to two, and then we're going to dip back in. The game, though, is to buy the best assets in the best locations from a seller that has urgency to sell because he has some distress, not on the asset, but on the debt itself, or the equity partners want out because it's taken too long and they got to get their capital back because they got to recapitalize and sell. That's the part. So and I'll redraw this so that way it's on a clean sheet because I get excited about it and I don't have a lot of room. I wish this thing turned that way. I'll probably get a board. Let me know in the comments if you think I need a bigger board. So, but again, starting from there, we got the sellers two, buyers one, buyers two, sellers one, and then it repeats again, starts going down. And this right here is that line that we're looking for. So we can come across this line and buy right here, which is what we're looking to do over at Bell Capital, and buy the best assets. This works because these assets right here are always going to have distressed sellers. Distressed sellers, not the asset itself, not distressed assets. You're going to find the best assets in the best locations at the best pricing, sometimes below replacement costs and below what the sellers paid for it at the time, because they got in at the height of the market. The market came down. They had to wait. Now they don't have to wait anymore. Things are starting to look up. and now we're at baseline again, and now we can play this game. But once you understand that, you know what you're looking for because in any buyer's market or seller's market, there's always going to be a standoff for a long time in between the gaps. And if you can weather the storms of the gaps, you can win this game. So that's why we're looking for what we're looking for because that's why, which is again why I believe, and I said this earlier, this is the billionaire maker. Because if you look at any firm, it is not to get in at this time. You already have to have knowledge, experience. You got to have capital. You got to have good debt relationships, broker relationships. You got to have kept those relationships for a really long time because everyone's waiting for this. This wasn't just the individual problem. Now, if you're a mom and pop, you're a dentist, some doctor, a lawyer, you were buying small properties, great. This is an institutional asset problem. These are developers, builders, investment banks, funds, pension funds. That's who's having the problem. That's who's going to be buying right now. And if you can invest with somebody like myself or whatever it is you're going to do, that knows this game and they're going to buy in buyer's market phase two, which is what we're moving into right now. So we can capitalize on the sales because you can buy here too. Because the goal is buy in here and also buy these. And once you kind of see the bottom falling out again, where people are starting to move into this seller's market phase two again, you wait. That's what everyone did. People put pens down, pencils down, they stopped buying, which is what we did. I saw it. I've been through these markets already. When I learned this, I was so young and I learned this and I saw it like on paper. I didn't have any reference point to be able to like, oh, okay, we made a bunch of money here, stop, wait, this is happening, and then start buying again here. Build up capital in this part. Like right here is your capital building. This is your capital building component, which is what we did. We're like, hey, let's talk to investors. Let's start the fund. Let's go make these relationships with brokers and commercial lenders and Fannie and Freddie and debt funds. Like that's what you should be doing during these times. Because if this is truly a billionaire maker, then you need to have your money ready. You need dry powder ready to go. So, and that's what we're doing. So I wanted to share that with you, but this is the markets cycles in a very simplistic way. Buyer's market one, buyer's market two, seller's market one, seller's market two. And to be able to buy at that baseline of seller's market phase two assets, great assets being built, newly built in a market where it's time to go because people have to sell, not just want to sell. And you're dealing with a seller that has some distress because they have urgency to move because their debt's up or their equity's up, and we can get great assets at a discount price. Or they're not a discount. I'm cool with buying a full price asset that a seller would never buy because if they're in trouble, they're not going to sell their bad ones. They're going to sell their good ones because that's where the money is. All right. And that's what we want to capitalize on. So I hope that helps you guys. Um, like this video, share the video, comment on this video. Let me know what you learned from this. Where do you think your market is? Now, this is market specific, but it's industry specific. I'm focused on multifamily real estate, different asset classes outside of multifamily, like if your office, your retail, you're an industrial, you're in new development where you're doing land. Like they're all going to hit this cycle at different times. But because it's real estate and they're all tied to the debt market, this happens every 7, 10, 12 years and it's already coming out of the other side. And will you be ready for it? So we are, I tell you. But if you have questions, go to bell-capital.com. We'd love to talk to you, answer any questions that you may have about investing with us, whether you can invest to your IRA, do you need to be accredited? Yes, you do. How long the investments are, all of that stuff. We're here for you. I want to answer your questions. I want to talk to you guys. I love talking to you guys. And I hope this actually shed some light on some stuff. A little confusing, but we go over this quite a bit over and over again to kind of share with our investors what market we believe we're in and why you should be investing in us right now. All right. So you guys have a great day today. Appreciate you. Like, share, comment, give it a thumbs up or a thumbs down. Don't be a hater and a hider at the same time. We're here for you. Let's get after it today. Boom.